The other day I received this message from a channel subscriber.
Hey Algo Trade Pro, I found a TradingView indicator that looks like the MACD, but it seems to me that it is much more consistent. Can you try it out?
And so I did, and the results were absolutely insane. Of course, I couldn't keep this information only to myself. It wouldn't be fair to all my dear subscribers. Your support has been amazing, and so, in order to thank you, in this video I will not only tell you everything you need to know about this new indicator, but I will also share all the real and proven results I got in my backtest after analyzing more than 1000 trades. I don't know if you are excited, but I am. Let's go! As I mentioned, the indicator that I will present in today's video is very similar to the popular MACD indicator. For those who don't know it, the MACD is a technical analysis tool used to identify trend changes and entry and exit points in a financial asset. On my channel, you can find a video where I tested a strategy that uses the MACD as the main entry indicator. If you haven't seen that video, I will briefly explain the strategy that was tested. It used two indicators, the MACD with the default settings and an exponential moving average with a period of 200. For a valid long position, the MACD had to give a long signal below the zero line of the histogram and the price had to be above the exponential moving average. And for a short position, the MACD had to give a short signal above the zero line of the histogram and the price had to be below the exponential moving average. For the strategy risk management, the ATR indicator with the default settings was used. For stop losses, the value was calculated based on the formula 2 times the ATR pip value, which often agrees with the last swing low for long positions or the last swing high for short positions. And for the take profits, the value was calculated in order to get a risk-to-reward ratio of 1 to 1.5. The strategy was applied in a 30-minute time frame in a data sample from 2021 to 2022 and on a lot of different markets across the Forex, crypto, stocks and even on the metals and oil markets. Here you can see some of the strategy's results. It was slightly profitable, but I didn't consider this strategy efficient. As I said in the MACD video, I don't advise using this strategy like this. At that time, there were many of you who were shocked. But I just revealed the real and proven results of this strategy, which is supposedly one of the best strategies out there. But will the results be the same if we use the new indicator that is very similar to the MACD? Let's analyze it. So, this new indicator is called... Sorry to interrupt your video, but I just want to let you know that I have a free Discord group where every day a lot of tips and trading ideas are shared. Don't waste this free opportunity to learn more about trading. You are welcome on our family. Now, as I was saying, this new indicator is called Coppock Curve, this one here. By default, this indicator looks like this, but I will change its style from a line to a histogram, and I will change the settings to 15, 21 and 16 in order to eliminate some false signals. As the MACD, this indicator is also a momentum confirmation indicator that oscillates above and below a zero line. And it is very simple to use. Once it turns green, so when the bar closes above the zero line of the histogram, you will enter in a long position. And once it turns red, you will enter in a short position. The Coppock curve is a flexible indicator that can be used in several markets and timeframes from scalping trading to swing trading. In order to find out if this indicator is more efficient than the MACD, I will apply it on the same strategy that uses the 200 period exponential moving average, with the same risk management rules, on the same time frame, same data sample and on the same assets where I applied the MACD, the ones I showed you before. And in the end, we will be able to fairly verify if the results are worse or better. As such, I will create a new strategy based on this indicator in order to test it as efficiently and quickly as possible, and I will be right back.
3 days later.
Okay, my backtesting bot is ready to be used. If you want to have access to the script with this bot, stay tuned until the end of the video. Before moving on to the backtest, I will just show you some trade examples. Here we can see that the price is above the 200 exponential moving average and the Coppock Curve Indicator gave a long signal. So we will enter at the close of the signal candle, which is this one. The stop loss value is 2 times 6.5, which is 13 pips and corresponds to the last swing low, and the take profit is 3 times 6.5, which is 90.5 pips. So, first of all, we can see that my bot entered the position and placed the stop loss and take profit values perfectly. Now let's fast forward to see what would happen. As you can see, the take profit was easily hit here and the bot closed the trade, and the bullish trend continued and with great momentum. But let's check another example. Here we can see that the price is below the 200 exponential moving average and the Coppock Curve Indicator gave a short signal. So we will enter at the close of the signal candle, which is this one. The stop loss value is 2 times 8.6, which is 70.2 pips and corresponds to the last swing high, and the take profit is 3 times 8.6, which is 25.8 pips. So we can see that my bot entered the position and placed the stop loss and take profit values again perfectly. Now let's fast forward to see what would happen. As you can see, the take profit was easily hit here and the bot closed the trade. But take note, these were just two examples and good examples in order to illustrate how you should use this strategy. We need to do a bigger backtest in order to assess the real performance of this indicator. Another important function of this backtesting bot is that it uses the Coppock curve as an exit indicator too. That is, if the Coppock curve gives an opposite signal during an open trade, the bot will close the position. In this way, the average loss of this strategy will not be 2%, but a value lower than that, increasing, for this reason, our average risk-to-reward ratio. So, as I told you, I will apply this strategy on the 30-minute timeframe of 10 different assets across different markets. I will use the data sample corresponding to the years 2021 and 2022, and I will use a 2% risk per trade with no compounding effect. Now, you are probably thinking,
but Algo Trade Pro, a backtest of that size would take months or years to do.
You are indeed correct, but that would only happen if I perform the backtest manually, which is not my case. I will perform the backtest in just a few minutes or even seconds with the help of the backtesting bot I created earlier. And how? It's very simple. As you can see, every time I select a new asset, my backtesting bot analyzes every valid trade signal in a few seconds and tells me every statistical detail. On the first asset where I will apply this strategy, which is the AUD/USD, once I clicked on it, the bot quickly analyzes every valid trade. It prints every entry signal on the chart with the respective stop loss and take profit values, and you can see that it is as accurate as possible. And then, based on all the trades results, the bot shows me every single statistical data about the performance of the strategy on the chosen asset. In this case, we can see that during the years 2021 and 2022, this strategy with the Coppock Curve and EMA gave 416 trade signals with a net profit of 73.51% and a 41.35% win rate. Besides that, if I click on the Performance Summary tab, I can check a lot of more statistical data, and here on the List of Trades tab, I can check every single detail of every trade. Amazing, right? And all of this with a simple click. Furthermore, if I want to test other data samples or indicator settings or even other risk management strategy, I can simply go to the strategy settings, change the parameters, and in seconds I have the new results. Super simple, as you can see. I can even use a trailing stop loss to try to increase my net profit. My backtesting bot can do all of that with the most real and proven results. Now I am going to do the same on the other 9 assets. I will insert every piece of statistical information on an Excel sheet and I will be right back to show you all the results. After analyzing over 3,604 trades in 10 different assets with my backtesting bot, here we have all the results. Based on these conditions, the overall win rate of this strategy was about 41.79% and it produced a net profit of 467.81%, which is very good and well above the 57% profit that the same strategy produced with the MACD. Regarding the win rate, I was expecting a higher win rate, but nevertheless, it was again higher than the MACD's 39% win rate. So, we proved that the Coppock Curve Indicator is indeed much better than the MACD indicator. And, of course, bear in mind that if you use an extra indicator in this strategy, like a volume or filter indicator, the win rate can improve a lot. Additionally, you can also try to optimize this indicator settings or use it on other timeframes or with different risk management rules, and I am sure your results will be overwhelming. If you want to speed up this process, you can have full access to my backtesting bot. Instead of taking months to carry out your backtests, you can start doing them in a matter of seconds and with the most realistic and proven results possible, as I have shown you before. As you saw in this video, I backtested over 1000 trades in a few seconds. Access the links in the description of this video to find out how you can access this script with the Coppock Curve Indicator and all my other scripts from different indicators and strategies. And that's it. I hope you learned something from this video and don't forget to subscribe, share and like it to support me in bringing more content to you. Be well, thank you, bye bye.